And so let's just take a look at how I look at the market and how I use these tools. So for those who really have never met me before, I do have a YouTube page, and I'm pretty proud of my videos, not because I get zillions of users, I don't, but I post them in a lot of places, so I don't really know how many I get, to be honest. But if you just type into the search, Jeff Scott Stocks, you should probably find my head. And if you click on my head when I was younger, you can find out all about my channel. And I have a lot of videos there. I also post on the HGSI site as well. I'm watching the questions come in, and I will get to them. And I did say in the beginning I was going to have an ask. So this once worked. I'm going to try it again. I can't show it to you. All right, if anybody has an account with Piper, it used to be Piper Jaffray, it's Piper Sandler now. I'm looking to get a piece of research there. It's called the something investor. If you have an account, Craig Johnson's the writer, it's a monthly. If you have an account at Piper Sandler, hgsidoc@gmail.com, please email me. I can show you what I need. And if you could get that, I would be very, very appreciative. Plus, you'll see how great it is. So when I did my review this, I always start by looking at the markets. I talked before earlier on this slide here, and I talked about where are we at in the market. And I commented yesterday when I did my video that this is a tough one because the NASDAQ stocks, the big cap techs, felt like they were falling over. The banks are starting to run up, and there's a lot of things that are uncertain. So it's not everything doing the same at the same time. So that makes this market more challenging. I mentioned that I have different approaches. I'm going through quickly. If you want the full version, just go watch the video I posted. But my stance changes as the market is different. And what I look at the charts, I follow certain things. I follow interest rates. Interest rates are pretty boring right now. They're so cheap, and nobody thinks the rates are going up anytime soon. If the rates do start to go up, that'll be good for banks. I look at AD lines, as John talked about, looking at getting clues in advance. Here's the NYSE that failed to take out its most recent high and rolled over this week. And you could see the major ETFs in this group here are the spiders, the Qs, and the diamonds rolled over. Also in there is the IWM. The only thing that picked up was the bonds. And then I look at breadth. I look stocks above the 200, the 400. And if you have TC2000, I point you to the T2121 indicator, which is a 3-month new high-low ratio. And when it gets up to the top, the market always turns down. When it gets down to the bottom, interestingly, the market always turns up. So I'm looking constantly for signals that give me, John talked about this, so I'll skip it, a clue. I talked about the buckets. Those who are old-time Ian fans know how he used to look at the buckets. Well, Chris White of EdgeRater automated the buckets for us. I hit one button and I shoot a picture and I look for how many stocks. I got to stop hitting my mouse and my keyboard at the same time. How many of my stocks are trading below the midline of their Bollinger Bands? And then where do they fall within the Bollinger Bands? And when I see a big pile here on the left, I know the market's going to bounce. And when it's overbought with a pile on the right, I know that the market is going to fall. Now, Sager's tools help me as well with this. I look for the Hindenburg-Omen. Again, I refer you to the videos, but this is something that fired like crazy earlier in the year, and it told us that the market was likely going to correct. And then I look at the Woody indicator for market sector strength. And then this has become one of my go-to tools. Sager showed it to you, and it sits on my desktop for the entire day as I am able to watch what's going on with sectors and down to the industry group and the stock level. And when you see the indexes setting new highs, and think about Monday, Tuesday, but you start to see that the stocks are building up to the red, you know that there's a change coming. And then he showed you his market rotation tools. The funny thing is when I did this independent of him before my call yesterday, I looked at financials, materials as the top two groups. He looked at just the financials. I then clicked this and I got the list of stocks and groups and financials and materials. I took the top 5 and I clicked the peer analysis. I came up with QB, and then I did my analysis on QB. And if you remember when he showed you a lot of red on some of the groups, on the short ones, you saw a lot of green here. And then the best of the best I thought was QB, but I also pointed out on my video that the market cap was too small. I used tools in HGSI and EdgeRater to give me a sense not only of how I did in the market last week, but what worked and what didn't work. Now, everything I'm seeing here, I do the exact same thing every week. My son tells me it's boring, but remember that slide about how important the market is? You got to know the market you're in. And then the canaries in the coal mine, and this to me is an important slide. You know, the FANG extended as created by Ian when he was still living in 2013. And what I showed or talked about was they dropped 18% in 4 days. And does that call a top of this market? And then I pointed out that, my goodness, it had a kind of a doji-like candle with a huge bottoming tail and ended at the 17-day. So what I titled it, a nice place for a bounce. And so I go through, I talked a little bit about the SoftBank whale and why the NASDAQ future commitment of traders report did not seem to make sense for the last 3 months, because on the E-minis, it was the individual investors buying, but on the NASDAQ, it was the hedge funds and the pros. Now we know why. And then I pointed out another person who I follow, and this is Chris and Kathy Chavacco, and they had a wonderful video on YouTube, CCM Market Model. They have a blog, and they lay out evidence. They'll never tell you to go long or go short. But what they told you was the data so you could formulate your own opinion. Of all the things I look at on the web, and they have no tools or education to sell you, they probably like to manage some of your money. They are one of the best. I've been listening to them for years. And they made me look at things like this. And I'm going to spend a couple seconds on this because, as you could see, you have a big uptrend here. And this uptrend is coming into resistance. It broke above resistance, and now it's struggling to hold it. What are we looking at here? We are looking at a ratio chart of the spiders to the TLT. Why would I ever look at this? Well, maybe it's time to start thinking about bonds. Maybe I need my own account at Piper. And when the spider is doing well, this curve is going to go up. When bonds are doing better than the spider, the curve dropped. We are at a very critical point on this chart where we look like we could be getting a failure at prior resistance, support. Does it turn into resistance again? If this is true, then those of us that are growth stock investors may need to reset some of our thinking. Now, again, Chris and Kathy Chavacco, CIOVACCO, Chavacco Capital Management, weekly webinar on YouTube. It's outstanding, outstanding. So I looked at this chart. If you look at the Qs versus bonds, same story. Lower left, upper right, stocks are in favor. You've got resistance. We're getting really close to hitting resistance here. And even a sideways move, as we've seen several times, tells you that stocks and bonds start to perform the same. Now, what would you think if I told you that over the next X months or years, stocks and bonds are going to have equal performance? You might want to add to bonds if that, I'm not saying it's true, but if it was true, why take the risk on the stock market when you could minimize some of the variation by buying bonds? I'm not a bonds guy, but I may have to start thinking about it and get my own Piper Jaffray. Here's a chart I put together in TC2000, just trying to look at, in blue, the performance of the Qs versus the performance of the bonds. And clearly, from 17 until the middle of 19, they separated, and you definitely wanted to be in stocks. But look at 2016. Look at 2015. TLT outperformed the stock market. Are we going to get into another period of that now? All I want to do is create the question in your mind. And then I always like to look at news and earnings dates, and I commented on that it was a medium week. I think I call it not a bad week, but anytime we got employment numbers in the land of COVID, where we're talking millions and near double-digit employment with an election coming, this is a very, I think, timely thing to think about. And then the earnings this week, and I think we heard about Slack some. There's a lot of things this weekend. I joked that I went to brunch at Restoration Hardware, the only place I've ever been to where I have to pay $8 to go shopping for their valet parking, and they don't even give you a validation at lunch. And they were packed. Maybe that's a good thing for their earnings. I got this from MarketWatch, wrong reference, I apologize. Econoday has a calendar. Bloomberg has a calendar. I like to look at them over the weekend so I know what's coming during the week. And this is from earningswhispers.com. You don't need to pay for it. Don't tell them I said that. Just go to Twitter, have an account, and type in Earnings Whispers search, and this will pop up. Every day it'll pop up with the big stocks that are coming out and some of the earnings. And then I talked about my thoughts. And 2 weeks ago, I anticipated, Ian's 3-road scenario. The high road as we go to the new highs. The middle road, I thought leaders would roll over and catch up to the laggards. And the low roll as we go down together. We clearly moved into scenario 2 this week. And then the question of a holiday bounce or deterioration. I too am in the bounce camp. And I came to that conclusion, maybe surprising to myself, after looking at the charts. And I'll show you some of those charts that did that. The CBOE volatility index spiked 33.9%. I bought some very cheap UVXY and VXX, and I turned less than 10,000 into, it's probably about 112,000. So about 100,000 profit in 1 week on 3 option trades. I also am short TQQ, which I know came up. We'll take a look at that. And the other thing, I got SPXU. So I protected my own positions as I talked down here. And I buy lots of collars. So I'm up 150% on the year. I was up 170%. Somebody I know is giving me a hard time because I came off my highs. And then I reminded them that's not 20% down on my portfolio, just on my profits. It's been a really good year. It's been a crazy year with the Fed committed to low rates for a long time. Not only will bonds become more attractive, it's hard to believe we're going to have a market crash. But I've never seen an election time like this, and I'm going to try and stay out of being political. So I do that in my mind. I go through that same analysis every day. It takes me about 15 minutes to run every one of those things and go through all of my charts, or to go through those charts. Now I want to do my top-down analysis, and I want to show you some of the power of HGSI, and then, oops, let me do that again, and then go and build some of the story about some of the other presenters' material. So I always start by going into HGSI, and one of the things you get when you first download is market analysis user groups, and the first one is Major Markets Plus. And I hit the warehouse view, so I'll open up sort of the radar screen here. And whatever group I'm looking at is typically what's going to open up in that radar screen. And then I set it for whatever ranking scanning tool I want. So I use the top-down tool there. And then the raw combo is one of the powers of HGSI, and it ranks things according to what you want to rank them by. And I have a series of videos that I freely share. In fact, I'm going to do it right now. It is called the HGSI Base Training. 5 videos, which I did earlier this year. I believe these are the most recent. And if I right-click here, copy Dropbox link, I'm sticking the Dropbox link into the chat bar, so anybody new to HGSI or wanting to learn it, there's the learning, and you feel free to email me if you don't get it and you want me to share it with you later. But this combo rank, which is highlighted here, is allowing me to look at stocks and rank them by price one day. Is it accelerating or decelerating? What's the direction? What's the force index? And then 5-day movement. So I'm looking this is all price and volume determined, and most of it's about one day. So the leaders on this were transports, Treasury Pro shares, the dollar, silver, commodities, high yield, and utilities. Now, I could tell you when I see that, I know that I sucked on that day because I'm a growth stock investor, and those are not exactly growth. Down on the list, I can find the NASDAQ, the Russell 2000, and the Innovator IBD 50 fund. That's where I typically live. Then what I do every night within HGSI, let's open up, and in about 4 minutes, let's go through all of the ones that matter to me. So I clicked on the S&P 500. I'm going to look at it with this view here. And then I'm going to open up 2 more windows. Here's a window here that's going to be a weekly window. And if it's right, it'll open up black. Come on, did I do it right? Or let me try that. I've got a lot of things open. It's probably taken longer than I wanted to open up. Come on. There it is. And then at the risk of killing myself, I'm going to do this one more time and open up a monthly window. Now, those who follow me for a long time know monthly charts. Why would Jeff be looking? Just because it's amazing at how these things have gone up. And very quickly, here's the S&P 500. This was fibs on the way down. This is the prior high. Why do I think we could be at a important potential bounce point? Because we bounced off of the old high. And so often what had been resistance turns into support. We'll validate that Monday morning. I know or Tuesday morning. The futures overnight have been positive on the S&P. Fair value was positive, so it's not as positive as you think. And I'd be hoping for a bounce on Monday. Now, do I think we're going to go off to new highs? Ask me on Tuesday or Wednesday or Thursday. My guess is probably not. I'm concerned that the news flow is going to get ugly from here, that we'll have our own hanging chad. But that's a long time from now, and I'm going to trade the market I see. So I do think we're at a viable point where we could see a bounce. That said, if we were to break below the prior resistance turn support, then we've got a 50-day moving average that's 2.5% away, and I got a 200-day moving average that's closer to 8% away. And if I look at the damage to date at the maximum down, and I'm looking down here, I'm not that good, I can read. 6.7% was the most we've dropped. And remember those charts in the beginning that said 8%? So 8% is free. We're not down there yet. I look at the Dow, let's just go in this order today, and I'm not going to have much more to say except it is sitting below its prior highs. Again, a new person sell signal, a mobile breakout from a squeeze. This is John's indicator down. This is a pocket pivot down, which may or may not exist because Gil doesn't talk about negative pocket pivots. And this is a kahuna, which is a big move in percent B. A lot of negative things on this, yet is this market going to bounce and have a good holiday week? I think that, we heard from everybody else their thoughts, so I'm not going to say anything different. The Russell 2000 is not even, I don't think it's at its 2018 highs yet. If this was a stock, uptrend, sideways move, 50-day catches up, I buy that stock. That's what I'm looking for, especially if I can get, and what's missing here is some positive momentum. You don't even need to know what these things are. I need to see blue and green things here for me to get excited. So the Russell also looks at a point. You notice here, if I clean up my scratches a little bit, it pulled right down to the 50-day moving average. That's got to be a positive thing if I'm looking for a bounce. So as much as I felt doom and gloom on Thursday, the way Friday ended, I wasn't so sure. And if I look at the NASDAQ, which has been the big boy of the bunch, well, that's biotech, not so hot. I mean, how can we be bearish with this chart? And yes, we had a massive sell-off on Thursday and Friday. and we ran right down to the 50-day moving average and bounced with a hammer. Now, this has got to be a line in the sand. And if we don't hold there, then I think we have more serious damage. This is not a sustainable up move. We needed a pause. So I think there is a chance that this could be just a pause to refresh. Now, I'm an IBD 50 lover. I'm an IBD fan. I have IBD. I'm a annual all-in MarketSmith subscriber, like $5,000. I'm an idiot. But look at the IBD 50 stocks. They've done great as well. This is a managed ETF, but it too looks like the NASDAQ. But isn't it kind of suspicious if you're a big bear? You fell down, you had a hammer right on the 50-day moving average. If I had to guess buyer or seller, I think this thing could bounce this week. And we heard from several that this holiday week might be a week that might have some bounce to it. I could look at the FANGs. This is a micro sectors FANG ETN. And just like my canaries chart, didn't come down to the 50 though, but you have a pretty substantial pullback here of 15% over 2 days. You know your portfolio got slammed if you have a lot of these. Unfortunately, I do, but collars help. But look at this. We got a hammer on the 17-day moving average. Is that bullish or bearish? I'm no Pollyanna. I'm not a perma bull. Sometimes I think I am, but I'm not. We're going to go down. But if I want to make the case that this is a place to bounce, it's a perfect place to sit. You look at what's not been strong. You can take a look at the U.S. dollar, but the U.S. dollar seems to have stabilized. It had a person buy signal come in a couple days ago. Is it starting to go up? Well, that's meaningful if you own gold and silver. Gold, I mean, again, if this is a stock, uptrend, pull back to the 50. Now give me some blue and green and momentum, and it goes to the sky. I got to see the momentum. Right now, I got to pull back to free parking. If I look at gold miners, they actually broke down through the 50 on Friday, but they bounced back above it. These are all in bearish patterns. Mobile breakdowns from the squeeze, negative pocket pivots. I wouldn't buy this until I saw positive momentum. Wouldn't surprise me if we saw that sooner than or later. Silver, which apparently, I guess, because it has some industrial uses, didn't look nearly as bad, I guess. And you can see here's the 50. So it's gone sideways despite the dollar. If the dollar goes down, this whole complex goes up. Sometimes I hate commodities because there's so many influences. I'm done. I've looked at the markets. I have a good feeling about where things are going to go. Just for grins, I put up biotech. I said, ick, let's look at biotech. Still ick. Now, you're getting close to that 200-day moving average. Maybe there's a bounce coming. You could argue that that's a hammer handle, and maybe the bounce is there. John would show you that the relative strength compared to the S&P started to improve last week. So you have some bullish convergence with the price coming down. He doesn't like me to say positive divergence because that's a positive and negative in 2 words. So bullish convergence. Maybe you're going to see a bounce there. This here is the weekly bongo, which is my long-term trending indicator. I'd feel a lot better if that was green or turns green. And then semiconductors. The beauty of HGSI. All right, I'm probably blowing people away, although I haven't seen a lot of people drop off yet. The beauty of HGSI is I hit one button, it updates it, it manages the groups, the indicators, the splits. I update it a couple times a day, and I've got more information than I need. I still need the other programs for trading, but the database sits on your computer. You can port it to Metastock. You can port it to other programs. It's just a great product. If I look at semiconductors, boy, right down to the 50 and a hammer. Does this feel like a bounce up or a bounce down? You know, everything inside me says the market's going down lower, and it probably is, but maybe not for the next couple of weeks. We'll see. We'll see. All I can do is say what I'm seeing today. And remember, as I probably should have emphasized, this is for educational purposes only, and I haven't told you what stocks to buy, so let me remind you, this is education only. I am a doctor, not a broker, and trading involves lots of risk. So I feel better I said that again. Now, the next part of top down, we looked at the market. So I'm going to put the market in either, if we go, I'm not going to go back to the PowerPoint, but you have those two middle buckets, week up or week down. I'm going to put it right in the middle. So it could go either way. Certainly not a super strong market where I'm all in, nor is it a super weak market where I want to be out. So now I'm going to look at the industry groups. This is what top down is. I'm going to hit highlight number 7, which is industries. I'm going to hit warehouse, and it pops up, and I have 175 groups. I'm going to go to 2-day force, and I'm going to see that I have 20 groups with momentum positive at the end of the week. Now, you would think, and I used to get fooled by this, that we'd have a lot of groups 2-day force down, and we don't. Because to trigger this group, you had to be new. You couldn't be up every day or down every day for long periods of time, because it turns out most of my stocks are in the 5-day force down, 72 groups. And if you're a growth stock investor, look what's in here: applications, e-commerce, communications, biotech, semis, infrastructure, software, internet-based services, life sciences, internet media, semiconductors. The whole HGSI complex was negative, and it's been negative for several days. If you go and you look at 5-day up, it's only 19. So I'm a bull by trading. I'd rather be long than shorting, although I had a good week shorting this past week. So I go to the top on the list. I make sure I'm ranked by my combo, and I leave that 2-day force up. I see cruise lines. If I right-click and then left-click change index group, the stocks now come out with the same ranking. So I can double-click on Carnival. It's going to show down here. And by double-clicking, I brought the entire list here in that order. And when I looked at these, T.G. Watkins, who now works with John Carter and Simpler Trading, I met him going to some seasonality and HGSI type programs. We keep in touch. He's got this cool indicator called the Moxie indicator, and it's short-term thinking. And these have popped up and down. Every time they pop, he's all excited, and I keep trying to quiet him down. Well, one time he's going to be 100% correct, and that it's going to keep on going. But I buy growth. I buy leaders. These are not leaders. Is it time to buy them? Well, they're accumulating. Demand supply 7.9% and 5.4 yield. Not my kind of stock. Norwegian looks the same. I'm more interested in Royal Caribbean. It's still, and wait till we get to the retail apparels. That's what I'm looking for. I still need it to break above this 200 and maybe test it before it goes higher. But I'd rather buy uptrends. Yes, it's up a lot since I said, nah. Had I bought on the bottom, I think I was probably selling down there. It's already up 275%. So God bless you, TG. You can take me out to dinner next time. I've made a lot of money buying stocks I could sleep with. Maybe it's time to be buying this. It breaks above the 200. It's more my style. My concern is every time it's run up, and you'd have to be in and out a lot to have made that money. So maybe it's time. I've missed the whole run. Maybe I'm not so smart after all. I might watch Royal Caribbean. The next group down are commercial vehicles. Same analysis. Workhorse group. This is electrical vehicle group. Is it a perfect chart? No, it's kind of messy as hell. So I could call it a high base. Is it a sort of a nasty looking cup handle with a breakout? Whatever it is, it's in an uptrend, sideways to the 50, a mobile breakout from the squeeze, and a kahuna. I like that. It's not too thin. It trades a lot of shares, really a lot of shares. I like to go back and get a sense. 1 million shares back here, and on Friday it traded only, 28 million. So obviously it's a Robinhood. Everybody's excited by it, maybe because of Tesla. But I have a position here, but I have a low risk options position. Navistar has broken out. Again, uptrend, sideways. John Person buy signal, mobile breakout from a squeeze. A kahuna. I had another set of signals come in on Friday. Is it extended? Yeah, this is the high jump bar, and it's kind of getting near the extended line, but this looked interesting. So I'm going to go through and look at a couple more. Airlines look just like cruise ships. Yes, someday owning United is going to be a $60, $80, $100 stock again, but when? We had a really bad tape on Friday, so anything that was positive probably had positive force and comes to the top of the list. So the airlines, United, American, Delta, all look about the same. They're going to be good again, but they're not my kind of stocks. Now, I couldn't help myself, and I bought some Alaska Air Group, and I actually have made money on this trade. I had bought it on Monday or Tuesday. I know I've made $4,000, which isn't a big deal, but it's gone up. But I don't love these stocks. I don't feel like they're going to go up to 80 tomorrow and make me a lot of money. When those are the things that are leading, you know growth's not there. Banks made it to the list. Now, the problem with banks is they all look like this. Again, similar to cruise ships, they've had a big move off the bottom. Are they ready to break out and go a lot higher with no interest, negative interest rates? I don't know if that's the case, but you'll see my watch list has quite a few of them on the list. Big banks don't look a whole lot different. The Bank of America, I know John was talking the negative case about it. Let me kill my, let me get to the right one. Hold on a second. John had, but if I had to, Mobo breakout from a squeeze, a pocket pivot, a kahuna. This doesn't look great. That would be a negative. But yellow means it's starting to go up. This is the 200-day moving average. The working hypothesis has to be that just like it has multiple times before, the working hypothesis is it's going to fail at the 200-day moving average. So why would I go long right now? I wouldn't. But if this thing breaks out and holds at the 200, maybe it might be time to start thinking about Bank of America. So I typically every day will go through the top 10 and on the leading groups. I'll look at the shorting groups. That is what top-down investing is. I know for most of you, you don't want to do that. So let me show you a really cool thing. I'm going to go to the scorecard combo filter, no filter. There's nothing to show because these are not stocks. And then I'm going to make this thing bigger for a second. This is called the designer. In the designer are these things called smart groups. Every time you run HGSI in the 6 to 8 minutes it should take to do a complete update, there are many scans developed by users. You probably heard about Gil Morales. You've heard me mention Ian Woodward and Ron Brown hundreds of times. How about John Person? And there are bullish and there are bearish scans. So I didn't have to, here are the ones that gave me a new buy signal, the top, I think the 20 or 30, whatever I programmed it as. So you look here, you look at industry groups, every one of these is in the financials except for biofuels. What does that tell you about financials? So you have all kinds of built-in scans. One of my favorite John scans is a HCD weekly with a PPS daily buy. And these have been great stocks for me over the years. You got to allow those SPACs in here. Ugh. I don't understand those SPACs. Maybe they're the best thing since whatever. Seem to me, I don't want to buy an acquisition company before they buy something. And people are buying these vehicles because hoping they're going to buy the next Tesla, I guess. Now, the interesting thing here is that each of these groups, again, some are bullish, some are bearish, have a list of stocks. Now, what would it be if we took all these bullish scans and we took every stock from every one of these scans and we created a list, and that every time a stock fell on a list, it would get a point. And then we take the top 50 stocks by points, meaning the stocks that were on the most bullish scans are in the top 50. Well, every time, every day you do an update, and it updates intraday, if you go into HGSI custom groups and you go to HGSI top 50 and you go to the most recents, these here represent the 50 stocks that got into the most bullish groups in the universe. So A bottoms-up analysis would be, all right, well, let's just take a look at the stocks that made it to the top 50 and skip what Jeffrey said. There'll be a lot of overlap, and there's no filter here on price and volume, which I think is the problem here. So I'm going to put a filter on this $5 and $2.50, which is what I like, or I'll do $2 and $5 and $5. Okay, that'll work. And that brought it down to 32. So these are stocks that might be things that I want to take a look at. So here's Toro Company. It's breaking out on the weekly. It broke out a couple weeks ago. A lot of blue here, green, mobile breakout from a squeeze. This is the industry group. It looks good. Tells me it's outperforming on the PMC market catcher. I built that in, but it's at the high jump bar at 100%. I'm going to say it doesn't matter because I only pay attention to the high jump and the low jump when something has been trending. And this thing is still well below its March highs. So yeah, it's probably extended, but not that extended. I will go down to the next one. I got to hit it twice to do that. I want to make double click so that the next one should be Darling. This is a great looking chart. Uptrend, sideways, mobile breakout from a squeeze, new John Person buy signal, and a kahuna. Again, on the monthly, it's been going straight up, and that might be bothersome. Let me show you what else I'm getting on this HGSI chart. I am seeing quarter over quarter growth and change. 1, 2, 3, 4, 5, 6, 7, 8 quarters back. And when I look at the changes, I'm going to 620 versus 619. 827 revenue is 848 revenue. That's a modest change. Earnings per share has gone from 16 cents to 39. That's 143%. So this gives me a sense on the fundamentals that I care about, revenue growth and earnings growth. Right here, it tells me that it's got a multiple of 17. When I see growth rates of 166, I get excited. It's not under demand because it's less than 1. It pays no yield. And the next earnings are November 4th. I just learned a lot here from looking at this. Now, I want you to watch this box. I don't know if this is a good stock or a bad stock, but I want to show you something that I built into John's stuff because it works for me. It doesn't have to work for you because I built it for me, but you guys get access to it if you own John's stuff. Again, these are SPACs. I'm not even going to comment on them. I want you to look at this box. I told you before that my favorite buy signal is to look for a weekly high close doji and then a daily PPS buy signal. Each one of these stocks, by definition, has a sideways move, 2 dojis. This took out the high of the doji. It's not trade station, so it's not get a color change. But you have a high close doji. You could argue it's in an uptrend. Short term, it was sideways. And it has a buy signal that occurred within 2 days. You don't even have to have the weekly chart open to see that because you can put this in your chart. You can have the market catcher and you know where it is on the high jump in your chart. These just don't know anything about Houlihan Lokey. It's not one of my stocks, but it had a high close doji and it should have had a person buy signal within the last 2 days, which it did. It's faltering here. It's not one that I would have shown you. The restaurant groups have been very strong. And again, well, this is an interesting little chart. It's not an IPO or anything like that. Weekly high close doji had on Thursday, a buy signal come in. Again, the relative strength is weakening, so that might be bothersome. But again, the purpose of scans is to automate the process to find stocks that you like. So what I do in my process is I basically go through that top down, and I also populate a large number of watch lists. Where do I get those watch lists? Again, I'm a little bit insane. You don't have to be like me. I spend a lot of time doing this. Maybe that's why I make the money, but I don't know. I download a ton of IBD 50 and MarketSmith lists. some are bullish, some are bearish. I then had a, what's it called? An automation in Excel, a macro written, so it automatically rips the symbols out of these, and it creates for me, all of these are in a text file. And then I go ahead and I populate a number of different groups. And then I end up with what I call my consolidated buys, which this week was $11.95. I added my price and my volume filters on. It dropped it to $7.72. And I looked at every one of those on Saturday. That gave me a list of 39 stocks, and I'll come back, that I thought were interesting. I then take my trade station and I spend a lot of time with two different sheets. One sheet is my Q sheet and one is my advanced screener sheets. I have daily, weekly, and monthly. I have integrated in one workspace John Person's indicators, Dr. K's LRSI and seasonality, Dr. Kelly's cycle indicator, and a couple of things I got from John Carter. And then the most important part are some of the things that I brought over from Q, which is auto trend lines. On the other sheet, I have the same things that you saw from Sagar. I take those top 50 and I dump them into, not top 50, but my buys, and then all the HCDs, high close dojis on the week, here, the weekly high close dojis. And I go through these one at a time, and I look for patterns that I want to buy. I mentioned retail, so let me go back to HGSI. Let me open up a single chart, and let me just look at daily and show you what I saw in some of the retails. Remember what I said about break above the 200, hold and break out? I think that's interesting looking. Again, it's not leading stocks. It's not high growth stocks. It's not market leading, but that's not working right now. So I might look at that. And remember, it failed here, just like Royal Caribbean, it broke out. Royal Caribbean does that. I'll pay attention to it as well. But I dump these stocks into TradeStation where I'm able to do the different things that I talked about. So I'm trying to think if there's one that I really liked. WBS. You've heard about it before. So WBS is a bank stock. So a couple of things that turn me on to WBS. First thing, I look at the price and volume chart here, and I look at its support and resistance lines. And I see that it broke above its resistance here, and on the daily on the right, and on the weekly. On the monthly, it's like the other financial stocks, it's been weak. It's got support sitting not too far under the daily price or just under the weekly price. This is seasonality. It's not a seasonality play for me, and I'd have to go look at it in Thinkorswim. This is an older version. I've got to update that. This green arrow here is a John Person buy signal. It's in a daily buy. I think there's one here. It's in a weekly buy. I like that. Monthly, not so much. It had a Laguerre RSI signal a few days back. The John Person, his OBV here is turned up. His volume has moved up, not big positive, but just like the OBV, it's moved above. It's coming out of a squeeze. I know these dots by heart. Had a pocket pivot, the PSCI reversed, and it had both a positive force and a positive kahuna. And it had a daily high close doji. There's some orange there. I find that stock interesting. So now I'm going to go over to Q, and I'm going to look at it on Q, and I see blue here, blue. So this stock broke out. It's a breakout candidate for my mind. And as you heard from Sagar, a bullish stretch, it gone down too far. That's how I look at it, how I interpret it. Volume was up. It wasn't extreme with the circle. And hey, It's got some overhead resistance here, and then this is his watermark resistance, but I could still get a $4 or $5 move on a $28 stock. And if I buy options, that 20% could be a lot. Again, this is how I'm looking at these things. Now, I ended up the week with a buy watch list. And again, you can look at the full video anytime. Of 39 stocks. How in the daylights, and I'm going to finish my analysis in a couple seconds and go through stocks or any questions you guys might have left. I know I'm going overtime. That's why I kept this to the end. I'm not stepping on anybody's toes, and you can always drop if you want to. I go back into TradeStation, and I have a series of radar screens where I have put my stocks. Okay, I put the stocks that I either long or short. These are the ones I'm interested in buying. And I could look for various signals from cigar, from HGSI type signals, green candle low, red candle high, squeezes, mobile breakout, breakdowns, pocket pivots, viable gap ups. I know when the earnings are, and then I've got my buddy John stuff sitting here. I don't need to be looking at the charts. When I see his stuff flashing, when I see new things come, these all reset at 9:30 in the morning and they start anew. I know to go look at the charts. Now, I am going to migrate over to Sagar's newest sonar. It just takes me a little while because I have a lot of different things to move from an indicator perspective. Same type of a thing. So I know with Sagar, and let's go find the stock using radar screen. Go with flow is a trend change. And I can see on my buy watch, there were a number of stocks with go with flow. Okay. Pressure would say volume supporting it. That's a good thing. A reversal. Okay. I might be interested in understanding who is this? WKHS had a go with flow, you get this right, signal, had a touch, which meant it hit support, and a bounce. All right, well, that's interesting. Go with flow. So it pulled back, it hit support, it bounced, and it has a new uptrend. All right, let's see what it looks like. So I can just go look at the chart, type in WKHS. And now it's about price and volume again. A weekly buy signal, pull back to support and bounced. What program have you ever seen that you can put stocks in a list and it tells you which ones pulled into support and bounced and has a new uptrend? It's beyond me how he's done all this with the math. So I may live at night in HGSI, and I do. But when the day comes, I am scanning to my heart's delight. Now, yes, I also have Dr. K's, but he went and updated the package, and I'm still working with it. And it looks like he's going to have some new tools coming. If I go into Thinkorswim, you probably recognize this because I've got Dr. K stuff down right here, his seasonality right here. If I go into Market Watch, here's my buy watch for this week. And if you come down here, you've got the directional scan, the 20, 40, 60. You have the stochastics, Laguerre RSI. And then I've had my buddy, Bob Mager, come up with a series of scans as I have as columns. So I know viable gap ups, pocket pivots, high close, low close dojis, which is not available to anybody because John sells that stuff. It's not available for Thinkorswim. I had it made for me, kahunas. So I could look at my own stocks and get a sense. One day market movement is another proprietary thing that finds new trends forming. And I could look across the top. Now, to me, this is not a great seasonality period of time. And so seasonality is not the big story here. The big story to me is finding stocks to buy, and that Laguerre RSI has been really good. And let me just show you how good it is. Lilly. All right, Lilly, boring pharma name. It's got a kahuna, had a pocket pivot, has a long signal, and a little bit negative, but really nothing seasonality. All right, let's go take a look at Eli Lilly. First, I want to look at it in HGSI. I know, I'm just about done, honey. Not you guys, that was my wife. Although I just watched Goliath, and all Billy Bob, whatever his name is, says is honey to every woman. So here's Eli Lilly, not a growth stock, pulled back to support, had a new person buy signal, a MOPO breakout with a squeeze, a pocket pivot and a kahuna. Person market catcher is improving, like that. And then I go over here and I look at the chart, and what do I see? The Laguerre RSI just signaled. Here's my person buy signal, and its seasonality after this pullback looks pretty decent to me. I guess this is the negative that it saw. So I just wanted to put it all together for you. I saw there were some things there that people asked about. So I'm going to look at some of these stocks real quick, and I'm going to go into TradeStation and do it. By the way, before I don't want to forget this, I could go into TradeStation Scanner, and you can scan for everything that I do. I can look at bullish seasonality 20, 40, 60. And these are the stocks, and you probably can't see them, but if I made this larger, you would, and it's got those, here is its performance. ATEC's got huge performance. It's a $5 stock. I don't know what to do with that. I also included earnings, date, and how many days before I get there. I could look at Laguerre RSIs with his scanner, and I could tell you what stocks that are in a buy, stocks that are in a sell. All right. So the scanner is a great tool. I can do similar things, but not as elegantly in Thinkorswim. So let's go back into TradeStation and let me look in the last few minutes at some of the stocks that were said here. All right, so, okay, Gary, I'll answer your question. First, Tesla. Here's the problem with Tesla, folks, if you didn't read the news. Tesla, some people think that part of the reason for this huge run-up was because of its likely to be inclusion in the S&P 500. Tesla did not make it this time. Here is Roy Kelly's weekly showing a cycle high 2 weeks ago. Interestingly, he's got a cycle low on the daily coming in. So after close of market, Tesla fell 6%. It wouldn't surprise me, and here on Sagar, he's got a bearish color there, a yellow change traffic light there. It wouldn't surprise me to see Tesla pull back until support. My guess is if it pulls back into support, just like it did here and here, that buyers like me are going to come in and buy a lot of Tesla. So I think Tesla's likely to come down this week. If I look at Dr. K's stuff with Tesla, I've got so many things here. And that did not exactly work the way I wanted to. All right. You could see seasonality is okay, and it's coming down. You want to buy it when it's breaking up. And isn't it interesting here? It broke up the same day that a person buy signal the day before PSAR reversal. So Tesla, get your pencil ready. Probably not ready yet. You heard ROST already. Halo is a stock that you may have bought because I said to buy it. I bought it, and it's really done nothing. As I said, it's done nothing. It's been relatively flat. Now, it's got resistance overhead. It's got a doji sitting here. The Laguerre most recent signal is a buy. It's not over yet. I don't love it here. I think I still have some options on it. If I had to be a buyer or seller, I'd be a seller of halo. Costco, love to shop there. I think their chart turned down a little bit this week. So I'll go backwards. I'm starting with Q. So Costco, I see that on Thursday it had this thing here, which is a Q stretch. That's a bearish, I've gone too far signal. I had a person sell signal come in on Friday. I have a magenta bar here on volume. This is a breakout to the downside. I don't think I'd be buying Costco here. If I go and I look at my other indicators, your Laguerre RSI hasn't turned down yet, but it looks like it's getting ready, and you had a cycle high. So Costco looks like it's had its day, at least as of Friday. Recordings will come out that you can download with the links. How to add the indicators to the Market Watch radar screen. They work on TradeStation. So I'm trying to remember what I did with when you buy the stuff, the 20, 40, 60 from Dr. K, he should be giving you the code for the columns or a URL that you type in to get the columns. The indicators in Thinkorswim look like video files. I think I had some, or maybe they were last week. So the indicators look like video files, and you just import them into a chart. I'm going to show you what I'm talking about if you think I'm crazy when I said that. The market thinks a TS file, Windows is a video file. All right, so they look like this. So you just import them into a chart. The Market Watch columns is a little bit more challenging because if you to bring a new column in, you have to put the formula in and then save it as a new custom indicator, and they give you a bunch of blanks. Some people learned how to do this as a URL. I know you can do it in Radar Screen. You can do it in Market Watch as well. All right, I'll do Domo and AMD, and then I'm tired. I can't believe I still got this many people here. My wife is looking at me like, when am I done? My dog wants to go for a walk, and some of you got to go eat some food. So let's look at Domo. I'm going to look at it 3 times. In TradeStation, I see it. Earnings must have just come out. It looks like there's a lot. These red dots are MACD divergence. Sell signal. RSI not giving a sell yet, but it's there. On the weekly, it looks, has had a big run. The issue is it having a reversal here after running higher. It's in a sell on the on the Laguerre. If I look at the Q, again, you can see how big it ran up on the weekly, and then it closed in the lower part. I see that candle at resistance. It looks like a failed breakout that could come lower. If the market's all up on Tuesday, it's going higher, but I think this is a stock that is at risk. And then in HGSI, just so I am an equal opportunity chartist, red candle high is a reversal signal. Big topping tail on the daily on Friday. It's still in an uptrend. It's still above the 17 and the 50. But compare that candle here, okay, and the red down there with Amazon. I'm not saying to go buy Amazon, okay? But I'd rather buy this red candle where the body and the close are up near the 17 and it tagged the 200 versus this red candle, which looks to me like it's on its way down to the 50-day moving average. The other question was AMD, so I'll go backwards this time. So AMD on HGSI, to be fair, I own it. I've owned it for a while. AMD, I've got puts on it, which I may cover on Tuesday if it trades up. AMD gave a, is it a pure hammer? No, it's got a bit of a top there, but it's got a big bottoming tail. If it gets back above the 17, I'll take off my protection. Until then, I'll wait and see. It's got a person sell a kahuna to the downside. That said, its longer term weekly bongo is still positive. If I look at it in Q, the most colorful charts known to man, indecisive day, bearish, sell signal. The only thing that keeps me from bailing are one, I've got put protection, and number two, this bar doesn't look horrible to me. Everything else on AMD looks like it's at risk. Hey, everybody, thank you so much for coming. I hope you enjoyed this as much as I did. I'm going to talk to Gil Morales and a couple of my buddies and see if I can't get them to come and do this as well. Lots of questions about getting Sagar stuff into HGSI, and I'm going to try and see what we can to do that. And I got John stuff in, so who knows? You all have a great rest of the holiday, and happy birthday, Ian, wherever you are. Goodbye, everybody.